What's up, everyone? It's Caddy with MoneyVest. So markets here with a very nice sharp reversal back lower. We were obviously much higher intraday for the markets, and then of course we recovered a little bit and then sold off pretty aggressively back down. Still ended up green on the day, but of course it was quite an interesting sell-off intraday, which I really want to look into from a technical perspective, and of course from a psychology and logic perspective as well from the markets, because a lot of individual stocks had these really long wicks on the upside, which basically represents there was a lot of intraday selling pressure, which is more important than where we closed on the day. So hope you all enjoy this video and find it helpful. If you do, make sure that you drop a like. I would really appreciate that, and subscribe to the channel if you haven't already. We covered a lot of fundamental analysis, technical analysis, options, and macros as well, and links to our Discord and Patreon is going to be down below if you're interested in joining us, and of course getting access to all the members only private videos. Get access to that 16% annual discount, trade alerts, trade ideas, buy and sell alerts, options alerts. Everything's going to be shared in our Discord, and again, a couple more spots left for the month of January of 2024. So, and also do connect with me on Instagram. My handle is going to be CastWRP. Link's going to be down below, and again, we'll love to have you on board and connect with you there as well. Now going over to the market, so NASDAQ here up over 32 basis points, S&P still at an all-time high, up 22 basis points at 4850, and the Dow Jones at 38,000, another new all-time high at over 36 basis points green on the day. So on the surface at the moment, it looks phenomenal. Markets are doing really well. They're still green, which is good. But if you take a look at the actual technicals in the candles, you'll start to kind of understand that, okay, there was some intraday selling, there was some profit taking, because we're at an all-time high, right? So everybody who's wanted to buy up until this point has already bought and is in the market. Where we go from here is really what's going to be interesting moving forward, which I'm going to take a look at and go over in this video. So Apple here up 1.22%. As you guys know, that we have a trade idea on Apple. We talked about this earlier in the weeks, and Apple has done really well pushing back up from this 200 simple moving average, 2 consecutive weeks of green. Last week it was up over 3%. This week it's starting off with it being up over 1.2, and it's getting up to over 193. Talked about it being very good buying opportunity in the 180s, kind of in line with that 200 SMA as well. So pushing higher very nicely and bouncing off of those levels. Not to mention that it was also very oversold on the daily candlesticks. So this right here, the daily chart, it was pretty oversold, and it's now starting to see that bounce back higher with the MACD also crossing over that signal line. So again, 4 consecutive back-to-back green days. Very nice to see that. Congratulations if you took the trade. Again, if you want to get access to all the trade alerts, link's going to be down below. Tesla still struggling, down over 1.6%. Amazon up over 36 basis points. We did have AMD finally starting to pull back a little bit, down about 3.4%, and NVIDIA still hitting a new all-time high, and Google and Meta slightly lower, Microsoft slightly lower, Adobe down over 1% as well. PayPal was green up until finally turning around and being red, and Enphase also was up at one point, I think over 10%, and then ended up, I think, pretty much flat on the day. It might even be down, wouldn't be surprised if it is. So it actually was up 3.4%, so $107. So there's a lot of stocks that actually saw that intraday selling pressure. This was the entire market. So again, overall, we had a pretty decent green day with industrials, financials, real estate, technology, healthcare, and energy sectors all pushing higher, with other sectors selling off. In the last 1 week, of course, again, it's been a little bit of a split market, with technology, comm services, industrials, financials pushing higher, with defensive, real estate, materials, energy, and utilities selling off. And in the last 1 month, of course, we've had communication services, technology, healthcare, financials pushing higher, with real estate, cyclical, utility, energy, basic materials all is selling off as well. With coffee prices up over 4%, we got lumber prices, silver, platinum, natural gas all pushing higher, with canola and oats pulling back, and Bitcoin selling off below 40,000 now, and we got Ethereum also down to 2,300 as well. So a little bit of selling pressure on BTC as well. Volatility stays a little bit muted, down about 1%, back down to under 14, so closer to 13 now once again for the VIX. And we did have, of course, crude oil starting to break outside of $73, $74 a barrel. This is going to be that support. This is where we have been consolidating. It feels like it's been a little bit more stable at these prices, at low 70s. And if you do see a recovery back up to $80, $81 a barrel, that is going to be that next target and that resistance to watch for crude oil. But also that's going to start putting an impact on inflation once again, which is going to maybe lower the possibilities of interest rate cuts, which is what the market's pricing in 5 to 7 rate cuts of 2024. Then, of course, that creates a bit of a challenge for the markets as well. Ether starting to roll right back down, so coming back down to that support inside this green support and green rectangle between 21 and 2300, and BTC also trading at just over $40,000. Obviously, it's been selling off ever since those 11 to 12 ETFs went public and they started trading. BTC has definitely seen a little bit of a pullback and a sell-off down, I think, over 10 to 12% from its highs of 49,000, actually 18.5%. So definitely a pretty reasonable, pretty decent sell-off for Bitcoin. Now going over to the markets, starting with S&P 500. So this is what the daily candle looks like, folks. Not the best. It does look a little bit of selling pressure intraday, as we did see buyers kind of push the markets back up to 48.68, new all-time highs, and then sellers stepped in to bring us right back down. And also red candle. So basically a red candle on a green day suggests that we closed below the opening price, even though we were higher from the previous day because we gapped up. So that basically does represent that, okay, it was pretty decent buying pressure, but intraday there was some profit taking as well. That's how I want you guys to start reading this candle. So very simple, I can tell you that, okay, this right here, very nice green candle, green body. That means we opened here, we closed all the way up here. There was a lot of buying pressure intraday to push the markets higher. Similarly, this right here, you got to understand what was the logic behind this candle, the way it looks, right? The way it looks is really going to tell you how the price action was intraday. So I don't want you guys to be reading too much into this, but yes, price action is king. It does tell you a lot about market psychology. It does tell you a lot about investor psychology and sentiment. And the bottom line is that, yes, we did see some intraday selling pressure, even though we did have a green day on the day. So this right here is the overall sort of a technical breakdown. Very nice, consistent higher highs and higher lows. I would say still within the context of this uptrend with a little bit of a downtrend over here back in August, September, October, once again being a very, very nice support and a low for S&P at around 4,100. And since then, we've rallied over 700 points or a little bit over 18, almost 19%. So the markets, of course, have done really well. Talking about the NASDAQ, again, same story. We are seeing the NASDAQ kind of approach that resistance of 15,400. So green day, but a red candle definitely does mean that we did have, some selling pressure intraday, and as it's approaching that resistance, that is also something to consider. Support level is going to stay put down to 14.4 to 14.6 for the NASDAQ as well. So a little bit of that support, and again, resistance is going to stay put at 15,100 to 15.4 for the NASDAQ as well. Talking about Apple, and Apple here, as we already did, very nice bounce back higher. 200 SMA also sitting right over there at that $180 mark. So that is something that is a very strong support. Next target and resistance all the way up to 198, 199. So this right here is going to be that level to watch for Apple, and support levels now is going to stay put at close to 189, close to $190 per share. Talking about Amazon, and Amazon here also starting to see a little bit of that selling pressure intraday, still within the context of this higher high and higher low pattern. So still very much pushing upwards in that uptrend. The next resistance is going to be closer to $161. And of course, support level is going to be right over there at close to $155, $154 per share, at least right now, because it's still trading above that level. The moment it breaks down below this, then we'll keep a close eye on this higher low to as low as $143 per share for Amazon as well. Talking a little bit about Tesla, and Tesla here continues to struggle lower and lower, down about 1.6%. Again, intraday at one point it was up, but sold right back down. Sellers stepped in to bring us back down to low 200. So this right here inside this green rectangle is going to be that area of support for Tesla. Previous level is going to be closer to 200 again. This is a very, very important area of demand for Tesla. So we'll see how well it kind of validates that support before the earnings. Again, earnings are on Wednesday. I've done a couple of videos already. Make sure to check them out. But that is going to be the analysis here. Low 200s is where we're at prior to the Tesla earnings that are coming out on Wednesday, January 24th. Going over to NVDA, and NVIDIA here continues to move higher and higher. I do think that there is going to be some level of profit taking here, considering how overextended and overbought this stock really is, almost at $600 per share. A new all-time high, almost $1.5 trillion market cap. This is insane. This is starting to get pretty insane. It's just seen a very, very parabolic move. So I do believe that there's going to be some level of profit taking here or some level of a pullback. Just be cautious. Just be careful if and when that happens. In fact, not if, when that happens. AMD, we already started to see that today. So again, very overbought with the RSI over 71. So is the MACD. And again, the price action here has been incredible with the market cap now approaching almost $300 billion. So that is absolutely insane with a new all-time high almost at 175. So support level is going to stay put down to 156, 157, down to 130, down to a 200 simple moving average in the low 100s for AMD as well. Talking about PayPal, and PayPal here unfortunately saw a lot of sellers stepping in at that 100 simple moving average. I did pick up some more PayPal today. Maybe not the best timing, but again, you can never time these trades as long as you understand the long-term value proposition for any company. More or less, you can't perfectly time the top or the bottom. So support level is going to stay put at $56, $57. I'm just waiting for the innovation day for PayPal and the earnings that are coming out and what Alex Chris has to say that is going to shock the world when PayPal does announce a lot of innovation, a lot of other features, a lot of other products and services that could potentially take PayPal to the next level once again and see that recovery back higher. So that is really why I am excited about PayPal's future. I use PayPal every day. Like I said, I use that, to run my businesses and basically receive all the payouts and do a lot of transactions. But it's a phenomenal company in my opinion. Fundamentally speaking, good revenue, good cash flows, good profits, and good share buybacks, and everything's kind of good. But the stock price, of course, has seen a lot of negative sentiment. So support level is going to stay put at $56, $57. Resistance all the way up to $77 per share for PayPal as well. Talking about Visa, and Visa here also starting to see a little bit of that pullback. So green day, but a red candle definitely does suggest intraday selling pressure. We got RSI, MACD also a little bit overbought here. So definitely, very, very overbought at the moment. 271 is where we're at for Visa. Going over to Meta platforms, and Meta here also hitting a new all-time high, I believe at $390. So very nice move to the upside, but again, intraday selling pressure. Sellers did step in, and support level is going to stay put at 352. So this right here is going to be that level to watch for Meta. And resistance is going to stay put at 383, 384 for the company. So all the way down to another support level in the 315, 330s. So those right there are going to be a couple support levels to watch for Meta moving forward. Talking about Netflix, and Netflix here also pushing higher on the day, but red candle continues to trade inside this rising wedge or this uptrend of higher highs and higher lows. And resistance, of course, is going to stay put at 488, 489 for Netflix, and support level is going to stay put down to $450 per share. So this right here is going to be that support level, previous resistance acting as a new support for Netflix at the moment. Talking about Google, and Google here also getting rejected at close to 150. So that right there is going to be that resistance to watch, with the support level is going to stay put down to 140 to 144. That's going to be that support level pretty much inside this green rectangle to watch for Google. And again, like I said, resistance is going to stay put at 150, 151 for Google as well. Very nice uptrend overall, higher highs and higher lows. Love Google actually from a long-term perspective, and I also do like Meta, Google. Again, a lot of these Magnificent Seven and fintech companies that have a lot of potential with cloud computing, cloud services, advertising, AI, hardware, technology-wise. These are pretty much the places to be long-term, right? Of course, they're going to go through and they're going to ebb and flow between valuations, between risk, between, how the sentiment is, because 2022, of course, was not the best year for tech. 2023 was quite the contrary, had the best year for tech, right? So there's going to be flows, and there's going to be that cycles of how these tech stocks and markets perform. But overall, long-term speaking, like these are companies that one needs to be looking at from dollar cost averaging standpoint, and also looking at it from a long-term perspective, and even from a trading perspective as well, because this is where a lot of the liquidity, a lot of the volume, and a lot of the money is being made. So Google here, again, 150 is going to be that resistance. Support level is going to stay put between 140 and 144. And then finally, we've got Microsoft, Costco, and Enphase. So Microsoft here starting to see a bit of a pullback, again, from its all-time highs of $400 per share. I think the market cap briefly may have touched $3 trillion, but we got a very, very overbought RSI and a MACD as well. And then again, support level is going to stay put down to 385 to as low as 366. And then finally, we've got Enphase here. Enphase down, actually up a little bit over 3.4%, but of course intraday was seeing a lot of momentum higher. It was up over 10% at one point intraday. And of course, right now we are going to see a support level back down in the 90s. Resistance right now is going to stay put somewhere between 115 and 116. So this right here is where we are getting rejected at the moment for Enphase right now. So pretty significant candle. And then finally we got Costco, and Costco here pulling back a little bit over 35 basis points. There is a negative divergence, so I would not be surprised if Costco does start pulling back and starts rolling over here very soon. Support level is going to stay put down to 644 for Costco as well. So bottom line is there's a lot of stocks, there's a lot of companies that are overbought, right? So that's exactly why I want you guys to be very careful, very cautious about where the markets are right now because of how overbought we currently are. And the risk reward is certainly not favorable from a long perspective. So as I've said before, I'm not really dollar cost averaging aggressively into this market. I'm not really buying individual stocks a lot right now, maybe some here and there, sending out some alerts. But the time will come when the markets do pull back, let's say 10, 12, 15, 20%. And that's when our opportunity will come in. When the volatility is high and the markets are down, that's when we start to open up that discount window and that buying opportunity, buying window. That's when we can start deploying cash once again back into the market. So hope you all enjoyed this video, find it helpful. If you did, make sure that you drop a like. Don't forget to subscribe to the channel. Again, links to our Discord and Patreon is going to be down below if you're interested in joining us. And as always, happy investing. I'll see you all in the next video.